There is a lot of talk about PE ratio these days. Few people are saying PE is a simple ratio, it is reliable, readily available, a magic ratio, a secret formula for making money. Then there are others who are saying that don't decide on the basis of PE. It is misleading, it is just a number, it does not show the real picture of the stock. Friends, investment has become a tricky business. People keep on guiding you about how to choose your stock to maximize your profit. PE ratio is one such concept which is gaining popularity these days. In this video, we will learn about what is a PE ratio, how is it helpful, how it can be misleading, and what are the factors that you should take into consideration while investing. So let us start. PE ratio. P stands for price of the share, E stands for earning per share, and ratio means the relationship between price and earning. The formula is simple. Price of the share divided by earning per share. Firstly, when we say price of the share, which is the price that we are talking about? Is it the face value of the share or the book value of the share, market value of the share, or the price that we have in our minds? So please note that price of the share is this price, which you see on the BSE or NSE. Now, who decides this price? You and me. Everyone who buys and sells the stock contributes to decide its price. Now, you will ask me, how is it so? More people want to buy a stock, price will go up. Less number of people want to buy the stock, price will go down. As simple as that. Now, what is earning per share? Take the annual report of the company. Go to the profit and loss account section. Here you will find net profit. This is the profit of the company after deducting taxes. Now the formula for earning per share is simple. Net profits divided by the number of shares gives you EPS. You can simply find EPS on Money Control site here. Now, as you have understood price and earning, the formula for PE is price of the share divided by earning per share, that is PE. See this old article. PE values of 282 stocks sharply below 5-year averages, your value picks lie among them. This article suggests that invest in KPIT technology because it has low PE ratio. Let's see the price chart of KPIT at Money Control. It is showing that on April 2019, the price of the share was 114, whereas today it is 63. So the price of this share has actually come down. Let us check the PE on Money Control. Now its PE is still below industry average, which clearly shows that articles and people in the market may suggest you to buy certain stocks on the basis of low PE, but low PE does not always guarantee profits. For those who don't understand what is an industry PE, which is mentioned here, it is the average PE of all the companies in the IT sector, that is called industry PE. Likewise, industry PE of different sectors are referred while comparing stocks. You can check the industry PE on the NSE website. Now let's take example of another stock. And before we see the PE of this company, let's look at its financials. You can see in the last row, the net profits of this company have been consistently rising. 1700 crores in March 2016 to 2700 crores on March 2020. So the earnings have been consistently rising. Let's see the earning per share. It is increasing consistently from rupees 18 in 2016 to rupees 28 in 2020. Now let us see the PE of this share. You will see that the PE is not only higher in general, but the PE is higher compared to the industry standards also. Its PE is 60, whereas the industry PE is 58 only. So unlike KPIT, which has low PE, Asian Paints has a high PE. But where, on one hand, KPIT share price has come down, the stock of Asian Paint has steadily risen. So when we see that stocks with low PE may not necessarily give you good returns, and stocks with high PE are not just overpriced every time. Now let's take example of Adani Greens. Its PE is 417, whereas the industry PE is 10. This means that the industry average of the entire energy sector as a whole is 10. Now, just check the earnings per share. It is 86 paisa per share, whereas the price of the share is 359. Now you will think that this stock is way overpriced, not worth investing. This is one way to look at it. But there is a flip side. You have to take into consideration that this stock is into the renewable energy segment, and this segment is likely to grow considerably in future. So people may be paying in expectation of future growth of this sector. Amazon was not profitable for the first 10 years. And if investor would have considered its PE and avoided this stock, imagine the losses they might have faced. What should be our aim when we enter stock market? Our focus should be on value creation from the stocks rather than just the price of the stock. Because if you notice, earning per share is merely a statistics. Company is not actually paying you that unless it is declaring dividends. Share market is completely guided by emotions. It is you and me who decide the price of the shares. So if 100 people think that company will grow and 50 people think that company will not grow, emotions of 100 will supersede and the price will go up. Similarly, if more people think that company will not perform well, its price will go down. So the moral of the story is statistics can be used and misused. My advice to you would be, do not trust statistics blindly. Statistics are meant to convince you. There is a famous saying that torture the numbers enough and they will confess anything. But the question remains, how do we choose stocks? There are multiple factors that you should see, hardcore facts and not just statistics, like history of the company, the depth of the market, the consistency of the returns, loan versus equity, management, and if there is a proposed change in the management, cash position of the company, liquidity position of the companies. There are certain liabilities which are not visible on the profit and loss account and balance sheet. Those you have to consider. If there are pending litigations, the profit margin, how are the promoters behaving, and the future of that industry. Please comment below if you want me to make a detailed video on how to choose stocks. If you like this video, please like and subscribe.